Hello and welcome to yet another journey into the world of information and education on taxation. Of course, the vehicle is Tax Matters. I am Chamaka Ohauchi. On today's episode of the program, we will be looking at two groundbreaking provisions in the Finance Act 2020. Provisions that have once and for all shifted the paradigm of the operations of free trade zones in Nigeria. But before then, we want to conclude the interview with Dr. Maidugu, which we began last episode. Dr. Maidugu is the Coordinating Director, Digital Support Group at the FRS. In the first installment, Dr. Maidugu spoke about a revolutionary technology tool which the FRS recently deployed, the Tax Pro Max. Dr. Maidugu, thank you for joining us on Tax Matters.
Thank you for having me.
Sir, you spoke about the Tax Pro Max. Could you please enlighten or talk more about the solution?
Well, the Tax Pro Max is an in-house tax administration solution that is developed by staff of the FIRS. And it is an end-to-end tax administration solution. There are different modules in the solution. There is the registration module, there is the filing module, there is the payment module, there is the reporting module. And as we progress, we are developing the audit module, debt management modules. So it's a solution that is being developed. And so far, we have, within just this short period, we have deployed the V80 module. So the VAT taxpayers can file their VAT, make payments for their VAT. The CIT, that is Company Income Tax module, has also been deployed. So companies can use this solution to file their company's income tax. The additional feature of this solution is that is done in such a way that reminders can be sent to taxpayers when as at when due. So the taxpayers, because we have their email addresses in the system, it automatically generates emails reminding them of their obligation and when to pay. Similarly, taxpayers can also print their electronic tax clearance certificate through the solution. And they also, it has the functionality for generating e-receipts. As you make payments, you can also generate your e-receipts through the platform. And so it's an end-to-end tax administration solution, very simple to operate, and we've engaged the relevant stakeholders, our stakeholders, based on the taxpayer segmentation, large taxpayers, small taxpayers, medium and small taxpayers. So we've engaged them. We've also have interaction with tax intermediaries, tax consultants, so as to be on the same page on the solution. Taxpayers have started using it throughout the country, and we have gotten good testimonies about the efficacy and effectiveness of the solution.
That's commendable for the service. Now, could you please tell us more about the VAT automation process?
Like I said earlier, VAT is an indirect tax, and based on the provisions of the Finance Act, the rate is 7.5% now, and so based on the laws, we have goods that are meant once consumed, VAT is paid upon. Now, in other jurisdictions, because of enhanced modernization and automation of processes, VATs are deducted as source. So they are automated in such a way that as you consume any item that is VATable, then the VAT element, the tax component, automatically goes to the account of the tax administration. So in Nigeria, we saw the need for that we should not be left behind. So what we did was we sit with different providers, service providers, and look at the different sectors of the Nigerian economy, and then go into an agreement in such a way that we now introduce platforms that will allow for the automation and effective deduction and remittance of the VAT component. So as taxpayers, as consumers consume goods that are vatable, then with this automation, the VAT element automatically goes to our account with the central bank. So it automatically, rather than waiting for a long period of time before this money is, when you have a manual system. But now we have an automated system where this VAT, as they are deducted, they are remitted, on time, real time, to the FIRS account with the Central Bank of Nigeria. And we have started very well. Branded supermarkets, if you go to shop right now and you purchase any item that is vatable, the receipts that you'll be given, you will see FIRS on the receipt, indicating that you have already paid for that VAT as a good Nigerian, and that amount automatically goes to the FIRS account of the central bank. Similarly, in the cable satellite sector, multi-choice, for example, if you renew your subscription, any of the bouquet that you select, the tax element automatically goes to our account. So this is what we are doing with the automation of the VAT, so that as you consume, we are also working with the telecom industry, the MTNs, the Glos, the Airtels, working with them, working with them to ensure that that also takes place. And we had a very good relationship with the National Communication Commission, which is a regulator in that sector, so that as you buy any recharge for your MTN, for your Glo, the 7.5% tax element will be automatically deducted via our automation platform, VAT automation platform, so that that amount goes directly to FIRS account with the central bank. Similarly, hospitality industry, as you go to hotels, eateries. So these are things that we are doing as part of the VAT automation program of the Federal Revenue Service.
Now let's look at the current status of the FIRS portal. How robust is it?
Well, the portal is very robust, as we have of recent modernized our processes. In terms of the infrastructure, we are also modernizing our ICT infrastructure. We are refreshing our servers that have been purchased for a long time. So we are refreshing the servers, which will give us more connectivity, the time spent connecting to our portal. So the taxpayer experience has been great of recent, in the sense that taxpayers, connectivity to our systems have greatly improved. So our portal has been very robust of recent.
That's impressive, because it has really addressed some of the concerns of the taxpayers with regards to its capacity to carry heavy-duty work. Now, I know that some taxpayers are also yearning for online meetings, online audit exercise, online audit reconciliation. They want US dollar denominated withholding tax credit notes and so on. So could you please tell us?
Using our platform, like I said, as part of improving our services and improving customer experience, we are embracing technology, adopting technology in order to meet the expectation of the taxpayers. We have been organizing different interactive sessions in which, because of the COVID-19 protocols, we are trying as much as possible to reduce physical contacts. And for that, we are now upscaling our ICT infrastructure, in which we organize Zoom meetings. We organize meetings via Jeans, via Microsoft Teams, and other platforms. in such a way that we reduce the contact between the taxpayers and our officials. Like I said, we do organize the reconciliation or the reconciliation meetings via such platforms. And at the same time, on the issue of withholding credit notes, I also need to mention the Tax Pro Max solution has the capability of issuing tax credit, withholding credit notes via the platform, because we have already automated the K card. So with that, so the taxpayer's ledger is updated automatically as payments are made. So this gives us the ability to look at all the credit notes that has been issued over time, so that the taxpayers can use these withholding credit notes to offset their liabilities appropriately. So our technology has that capability. And so all the credit notes that have been issued from June 2020 to date are automatically on the platform, while we are making efforts to also bring on board those that were issued, the legacy withholding credit notes issued before June 2020. By and large, we are doing what is required in order to enhance the customer experience via our ICT platforms.
Do you provide goods and services? Then you must answer these important questions. Are you registered for VAT? Do you charge VAT on the goods and services you provide? Do you keep records of all your transactions? Do you file VAT returns? Do you remit VAT collected to government coffers? If your answer to any of these questions is no, then you are breaking the law. The law demands total compliance. Therefore, you must register for VAT. You must charge VAT on goods and services. You must file VAT returns. And you must remit all VAT collected on behalf of government within 21 days to the bank nearest to you. To do otherwise is a crime punishable everywhere in the world. VAT is prescribed by the law. Do the right thing. Collect and pay VAT. This message is from the FIRS. It pays to pay your tax.
As you can see, the FIRS is on top of its game. We move on as we get Dr. Maidugu to talk about the second major aspect of the focus of the FIRS in this new dispensation, that is, the emphasis on indirect taxes over and above direct taxes. We are talking about value-added tax, stamp duty, and such other painless taxes. Now, we also like to know if there is any plan in place to enhance the collection of VAT, stamp duty, and other indirect taxes.
Thank you. The government of recent have emphasized the importance of indirect taxes. In particular, VAT and stamp duties. And if you look at the provisions of the Finance Act 2020, it is clearly specified that the FIRS is now given the mandate to use appropriate technology so as to collect these indirect taxes, in particular stamp duties and at the same time the VAT. So we are using, working with different service providers so that we collect this VAT from source. We are working with these service providers as a taxpayer, buys an item that is vatable, let's say from branded supermarkets. So based on the arrangement that we have now put in place, the VAT, which is 7.5%, will be automatically deducted as you now purchase or consume these items, these vatable items. So we have now introduced this, what we call auto VAT collect in the cable satellite sector, in the hospitality sector, and then some of the branded supermarkets. As you consume, then the VAT element automatically comes to the FIRS. So this is an improved way of collecting the indirect tax which you are referring to.
Very impressive. Now, to wrap up this interview, sir, how do you see the service in the next 3 to 5 years?
This is a very important question. Now, as a service, we are developing a digital transformation strategy to cover the period 2021 to 2024. So this digital transformation strategy is a document that encapsulates where we want to be in the next 4 to 5 years. Now, the tax administration is evolving and is changing all over the world. We have digital disruptions. New technologies are coming on board. So as tax administration, as FIRS, we want to meet up with these challenges. And that is why we are coming up with the digital transformation strategy document, which will spell out our current situation and what we intend to be in the next 4 to 5 years. We want to see an FIRS that is technology driven in the next 4 to 5 years. An FIRS that uses big data or mega data for analytics. An FIRS that can meet the challenges of the blockchain technology, of cryptocurrency. So the world is changing. So as an emerging tax administration, we are also working towards meeting this, and based on the structures that are put in place and then the investment that is required and management's direction, we hope to meet these challenges in the next 4 to 5 years. We are working with our development partners to develop and work and finalize the strategy. We have gotten the draft, which is receiving attention on the part of management. And I assure you that in the next 4 or 5 years, FIRS will be a tax administration for this century.
Thank you very much, sir. We really appreciate your time.
Thank you for having me.
We thank Dr. Maidugu on your behalf. The conversation continues as long as technology and automation are the main drivers of the process at the FIRS in the present and in the future. You will be seeing more of Dr. Maidugu from time to time in his capacity as the Coordinating Director, Digital Support Group at the FIRS. In the introduction, we spoke about 2 earth-shaking amendments in the Finance Act 2020 concerning the Nigeria Export Processing Zones Act and the Oil and Gas Export Free Trade Zone Act, to the effect that entities operating in those zones are now required by virtue of the amendments to render tax returns to the FIRS. On Wednesday, the 24th of February 2021, a delegation from the Oil and Gas Export Free Trade Zone Authority came calling at Revenue House in Abuja for the signing of an MOU between FIRS and the authority. The MOU is intended to foster greater collaboration between the 2 national agencies in the administration of taxes arising from the activities of all licensed enterprises and companies operating in the zone under the authority of the Oil and Gas Export Free Trade Zone. Mr. Oluwafemi Oluwaniyi, Coordinating Director, Tax Operations Group at the FIRS, stood in for the Executive Chairman FIRS at the event.
I call this groundbreaking gathering in the sense that what we are gathered to achieve is actually going to be a milestone. The continuance of the effects of taxation upon the developmental process of Nigeria. And it's a very challenging thing that the 2 agencies have come to a meeting of minds. Available records shows that your agency has been collaborating with us since 2010. And this laudable initiative of executing an MOU today was conceived long time between the 2 parties and was consolidated at the stakeholders meeting of 28 February 2019, held at the instance of the then Chief of Staff to the President.
Mr. Oluwaniyi referred to the amendments to the acts governing the two authorities.
In between the several efforts we have made, and now something significant came on board. That's the passage of the 2020 Finance Act, which incidentally has a very significant portion about collaborations. The expectation now is that all players in that zone, that's the oil and gas free zone, should be filing returns with the Federal Inland Revenue Service. But that notwithstanding, there's not much we can achieve even with that, without such of a robust collaboration that we are envisioning.
The Memorandum of Understanding between the Oil and Gas Export Free Trade Zone Authority and the FRS has since been signed off by both sides, and like Mr. Oluwaniyi said, everyone is looking forward to robust collaboration, all aimed at increasing the revenue base of our dear country.
The MOU sets forth the terms, the understanding, and the obligations of both parties. In conclusion, ladies and gentlemen, there's no gainsaying that this collaboration will go a long way, blocking loopholes and gaps created by the laws and ensuring that tax planning and evasion by some enterprises operating in these zones are reduced to the barest minimum.
We sat down with Mr. Oluwaniyi for more on this and other matters. Mr. Oluwaniyi, thank you for joining us on Tax Matters.
You're welcome.
Let's look at the provision in the Finance Act 2020, which has made it mandatory for entities operating within the export processing zones to file tax returns. Now, I would like to know, why does the FRS want them to file returns?
Oh, thank you for that question. Of course, it's a very valid question, because what you will be thinking of is that these are entities in the free trade zones, and the law says that they should not pay tax. They should not pay tax. But many of us don't consider the fact that there is a condition that makes them to be in the zones. The condition is that they are exporting. They are exporting their production. We have the oil and gas free trade zone, and we have the other one, NEPSA, that is Nigerian Free Trade Enterprises Zone, which is about the non-oil. So what happens is that the law actually makes it clear, even at the tax laws, that they are only exempted to the extent of the businesses that conform to the conditions of their being in the zone. Okay. That is, in terms of export. Where they come into the custom territory, that means where they now sell goods into Nigeria, it is not covered. They are supposed to pay taxes. So a lot of people are not mindful of that, and they themselves usually. So what we find ourselves doing, therefore, is that when we allow them to go without filing returns, there is no way, there is no basis for us to scrutinize which part of the business they actually did within Nigeria, which part are exported. That's why there was the necessity to be filing returns. And beyond that, there's also the agency aspect of it. Even if you are in the free trade zone and a Nigerian company has come to construct an office for you, that Nigerian business is supposed to pay tax. So we would want them as partners in progress, just like the other agencies of government are doing, to be able, and the oil and gas players have been mandated to be able to withholding tax from the contractor they are going to be to pay is supposed to be remitted. They are supposed to help us as agencies of deduction of other people's taxes. So for these reasons, it was necessary that we have visibility into their space, and that's why that amendment had to come. And I'm happy to even tell you that we have moved far in that regard. As a matter of fact, just yesterday, we signed what is called a memorandum of understanding with the oil and gas zone. We're going to still sign with the other, authority too, which is about the need for collaboration, because we still need them, despite that amendment, in order to get across to the enterprises in the zones.
The interview with Mr. Oluwaniyi will continue in the next episode of the program. Thank you for watching. See you next week.